Hello and welcome. You tune into bnsn. I'm Ankita Saxena and with me is Kavita Thaplayal. In the next 1 hour, we'll get all your stock-specific questions answered, and for that, the number is now going to flash on the screen. You can write into us with the stock query, the buying price, the holding period, and we will have them answered by our technical and a fundamental expert. So what are you waiting for? Start writing in and we'll be taking your questions live on the show. But first, before we start with the show, let's take stock of how the market is shaping up at this juncture. Well, I would say, thank God it's Friday, TGIF. I mean, after the sell-off that we saw yesterday, I mean, we did need this breather that came in. Now, this is on the back of the commentary that's coming in from Donald Trump and asking, Israeli PM to really hold that fire, at least on the strategic gas and oil plants. And on the back of that, we did see oil prices cool off a little, and that was buoying the sentiment there. And Nifty is also managing to hold on to gains of 1.2%. 23,250 is what Nifty is trying to maintain as of now. Nifty Bank is also trading up, it is holding on to the 54,000 mark. That is trading up 639 points, 1.2% of an uptick coming in on Nifty Bank as well. Let's pull up the charts for the broader markets then. Mid cap is also trading up with gains of 1.5%, 1.6% actually, and small cap is also trading with gains of almost 1% in the trading session. So that's also adding a lot of leg to the rally. The broader end of the market is also participating. Let's talk about the sectors then. All the sectors are as of now trading in the green, with the PSU banking names that is taking the charge from the front. We have Canara Bank that's up and away, almost 4.3%, Maharashtra Bank that's up 4.5%, Indian Bank, IOB, Union Bank, Bank of Baroda, they're all trading with gains of 3+%. It's the PSU pack that is really taking it from the front. Metals is also doing very well. JSW Steel, Tata Steel, Jindal Steel, all of them are trading with gains of anywhere between 2.5 to 4%. But the thing to worry in this market right now is actually the rupee hitting a record low of 93.28. So rupee depreciation is a looming concern on the market. But as of now, the advance decline ratio is clearly tilted in the favor of advances. But let's get a snapshot of how the F&O universe looks like. For that, my colleague Sajid is joining us. F&O 360, that's powered by 5paisa. Sajid is now joining us. Hi, Sajid. Tell us, what does the F&O universe look like right now?
Thank you, Ankita, for that. Let's look at what's happening in the F&O market. The Nifty is up nearly 1.25% in today's trade, but you're seeing some kind of short getting built up in this market as well. It's off today's high, but there's some unwinding of positions still happening with respect to short positions, and that's also contributing to the gain of Nifty as we speak. The premium for the Nifty futures is around 28 rupees. The Nifty Bank is seeing a good amount of short covering, with open interest down nearly 1.13% in today's trade. The bank index is at 1.12%. Let's look at the constituents of Nifty Bank, and that gives you an idea of short build-up happening. That nearly open interest up nearly 3.65% for HDFC Bank. There, the stock is down nearly 2%. We're seeing long buying happening in ICICI Bank, Axis, Kotak, and IndusInd. There is some kind of short covering happening in PNB as we speak, and while other PSU banks are also seeing some long buying, which includes SBI, Bank of Baroda, and Bank of India. In the options market, Nifty options market, you're seeing a good amount of put writing happening. Aggressive writings are happening in 23,200 levels and 23,300 levels. There is a good amount of counter happening in terms of call positions getting written there at 23,300 levels there. If you look at the distribution, the 23,300 is acting as a good resistance for the market as we speak, but there is additionally build up of open interest happening there as well. So the market so far is between 23,000 and 23,300. If the put writers are able to cross the 23,300 mark, then you're going to see a markets inch up from here on. But futures gainers include INOS Wind, where the futures is up nearly 6%, Tata Elxsi is up 5.8%, and BHL is up 4.7% in today's trade. In losers, you have Petronet, LNG, MCX, and BSC all down over 2% in today's trade. In the open interest gainers, you will have stocks like Shriram Finance, where there's long buying happening. The open interest up nearly 6.87%. Muthoot Finance, short build-up happening there. The open interest up nearly 4.6%. And Coal India, again, long buying happening with open interest up nearly 4% in today's trade. Among the losers, you have Suzlon, Yes Bank, and Pidilite, all of them seeing some short covering happening today, with open interest down between 1.5 to 2% in today's trade. Most active stock options include HDFC Bank 800 March call. There, the open interest is of nearly 68 lakhs, with the premium down nearly 6.5 rupees at 10 rupees as we speak. The stock is down nearly 16 rupees in today's trade. Among puts, again, HDFC Bank 790 put is active, with the premium up nearly 7.6 rupees to 21.5, and the open interest is up nearly 1.29 lakh in today's contract. So it's a stable market for now. Let's see what happens in the next 2 hours. Back to you.
All right, so that's a FNO 360 snapshot. Thank you so much, Ajit. But then let's welcome our guests so that we can start your stock-specific questions. We can start answering them. Avinash Gorakshkar and Kunal Bothra, our guest on the show today, joining. Hi, welcome and good morning, gentlemen. And looks like a good Friday and a happy Friday. Lots to discuss. But Avinash, let me begin with you. What's the sense of the markets? A good end to the week. Can we say that finally, or no?
Yeah, good morning, Kavita. I think quite rightly, it's a good Friday compared to yesterday, when there was a bloodbath in the markets. I think clearly, today markets have seen a bounce, some amount of relief, coming post Donald Trump saying that Israel should not bomb the gas facilities or the oil facilities in Iran. I think clearly, markets are expecting that over the next, say, 1 or 2 weeks, some solution on a ceasefire or maybe a kind of a diplomatic kind of method of ending this war should come in. And that is something which the markets are possibly positive about. And that's the reason the bounce back has come in. But on the caveat side, the rupee has weakened quite significantly. And LNG prices have gone up. So I think, it's going to be a little tough for the Indian economy. But I think net today can be a good day. Hopefully, the second half session should also be good. But I think hopefully compared to yesterday, today I think some buying, specifically in some stocks, should come in, because yesterday the markets had corrected sharply and a lot of value is now slowly emerging. But hopefully once the war ends, you'll see a trajectory going upward. So I think one needs to keep a stock specific view. And I think today should be a positive day, when we close the market.
Market snapshot, but then let's get connected to our live viewer also. This is Mr. Anand from Goa. Hi Anand, good morning. How are you?
Good morning, fine.
How is Goa?
Goa is quite good. Hot actually, hot and humid, but it's still pleasant.
Yeah, it's still pleasant, definitely.
Yeah.
Okay, so what's up? What's your question?
Yeah, so I have Crompton Greaves Consumer Electricals, which I've been accumulating slowly, and my average price is 360 around. Okay, 100 shares. My question is whether I should average and add more at this price. My horizon is around 3 years. 3 years plus, actually.
Okay, lovely. Avinash, I'll come to you. What's going to be your take? How can you help Anand?
No, I think, he selected the right company, a very good, kind of parentage. And most importantly, this is a sector which is expected to grow quite rapidly in the coming financial year. See, my sense is if the investor has a 3-year call, then I think definitely he should average. My sense is that this company should definitely bounce back in FY27. And in terms of the performance in Q3, it has been quite satisfactory. The Q4 should also be good. Typically, I think, FY27 should be a good year for the domestic electrical kind of segment which the company operates in. Hopefully, I think in the next, say, 12 to 15 months, you could see a good earnings traction coming in. So I think you can average now and, keep a time frame of at least 12 to 15 months. You should be able to get a decent risk reward going forward.
All right, decent risk reward going forward, 12 to 15 months a time frame. You can average, but then Kunal, would you want to recommend a level at which he can think of averaging?
So I think the stock seems to have found a good support in the 200 to 20 range. 217 is the low the stock had made very recently, and I think from there it's bounced back towards 244 mark. If I'm not wrong, I think it's the 6th consecutive quarter of a price downtrend for Crompton in that sense. So you can't expect the stock to keep on performing on a negative side, on a quarterly basis for so long. So there's bound to be a turnaround of sorts for the stock price. As a near-term support, I would sense that maybe this 200 to 220 range is a good range where you can look to average out further for Crompton.
All right, so that's welcome back. You're tuned into Buy Now Sell Now, a show where we get all your stock-specific questions answered. And now we're joined by a live caller, Sunny, who's calling in from Mumbai. Hi, good morning, Sunny. Thank you so much for calling us.
Hi, good morning. Thank you so much for taking my query.
Right, Sunny, tell us what's your
wanted
question.
to- I wanted to ask what is the best price to add ethos for long term, like 5 years?
All right, Ethos for the next 5 years. First, we'll get the entry point. Kunal, Ethos, what would be a good entry point? Because I can see the stock has corrected quite a bit. Year to date, that's down almost 26 odd percent. But in the last 5 odd days, it has started moving up. Like a 12% jump is what we're seeing on the charts. What is a good entry level for this?
See, first of all, I think it's a very good stock to hold on to from long term, even though the chart history is just limited to the last 4 or 5 years for the stock. But then in that kind of a time frame also, the stock has not just done remarkably well, but it's managed to absorb a major part of the market volatility. Yes, in the last, I think, 2-3 months, it's seen a correction, from 3,000 levels thereabouts to now 2,000 or lower than 2,000, which it tested a couple of days back. It looks like that this 2,000 mark for the stock is supposedly a very good support for the stock price, because even last time, I think last year, in the month of March, April somewhere, the stock had made a low which was around the sub 2,000 levels, 1830 thereabouts, formed a bottom, and from there the stock climbed up towards 3,000, 3,200, making a fresh high for itself. So I think in that context, I would look at 2,000 or even the current levels as a good buying zone for Ethos if you're a long-term investor.
All right, I hope you got your entry level, Sunny. But let me come to you also, Avinash, for the fundamentals on this, because Kunal is saying that this is a good stock to hold for the long term. Now, this is a luxury, watch brand from Switzerland, and it's India's largest authorized luxury watch retailer with 80+ stores. In the long term, do you see that story to be intact with perhaps discretionary spend picking up, once this dust settles? Avinash, what would be your take on Ethos?
Yeah, definitely. This is a good company with a very good long runway for growth. In fact, my suggestion to the investor is that if he has a 5 year view, he should actually buy the stock in an SIP fashion. I think there's no need to buy everything in one shot. Probably, you could get the benefit of the market volatility. It's better that he averages continuously and buys small bits and pieces in this stock and stays invested for the longer term. So I think in this process, his average cost also would be workable, as well as the runway available for him would be quite large. So that should be his strategy.
Okay. Welcome back. You're watching Buy Now Sell Now. We're answering your stock specific questions, and Kunal Bothra, Avinash Purakshkar, our guests, are live with us. But before that, let's quickly flash our WhatsApp number so that you can send across your questions on WhatsApp. Write the name of the stock, the price at which you bought it, and we will accordingly give you a take, whether technical or fundamental. Okay, let's move on. Let's take a WhatsApp question. This is from Mr. Harindra Nath, and Kunal, he's a big fan of yours. He's been following you since 2020, and this question is for you. He's accumulating HDFC Bank since Jan 2022, and he has 121 shares and an average price of 764. He wants to add more, and at what price he should be doing that, and what's the time frame and the outlook that you might want to recommend?
Thank you so much for that. So I think on HDFC Bank, I would believe that it's a good point where you can look to start buying in a very scattered approach, even from current levels. Now, I understand that the stock has fallen more than 25% in the last 3 months. Such kind of news flow which comes into stock prices at the end of a corrective wave generally signal that maybe a bottom process formation could probably start off into the stock. And a top quality name like HDFC Bank, which has performed very well over the last couple of decades, you rarely get an opportunity of a 25 to 30% correction into these names. But it's just that with the gravity of news flow which has happened yesterday for the stock price, you might see near-term shocks for the stock. So you'll have to keep some bit of powder dry in case if you're looking to average out further. But yeah, I think at current levels of sub 800 thereabouts for HDFC Bank, it's a good price point where you can look to average. And since you've been doing that for the last few years, I would believe as a process, you can continue to do that.
All right, that's the view on HDFC Bank. But let's move on to the next question that's coming in on WhatsApp. Chetan from Bangalore writes in. He says he has 2 lakh liquid cash, and he is planning to invest that in Narayana Hrudralaya. It's 60,000 rupees. Indigo 60,000, Concord Biotech 60,000, and M&M 20,000. He needs the entry level. And when should he exit from these, or are these good options? And can you suggest some stocks? Kunal, let me come to you for this one. He wants the entry level for all these counters. Narayana, Hrudale, we also have Indigo, Concord Biotech and M&M. Those are quite a few names. But let's just start with Narayana.
So Narayana Hrudale, I think the near-term support for the stock is around the 1600 levels, slightly below that mark, 1575, 1580 approximately. The stock is trading 100 points above those zones. But the bigger concern for Narayana Hrudale is as a chart that on the weekly time frame basis, the stock has broken below a major MACD support. So, near-term wise, the stock may take support sub 1600 levels, bounce back, but I'm not sure whether, on a medium-term basis, the stock can do very well for itself. So, if you're looking to buy, I would suggest buy in a very staggered approach for Narayana Healthcare starting from 1600 levels or sub 1600 mark. If I can also add Interglobe Aviation, that's a stock which has gone through a decent 2000 point correction in the last 3 months from December odd, with the stock corrected from 6,000, 6,200 levels to now 4,000, 4,200 mark. So I think at current levels of 4,000, 4,200, it's a good point where you can look to start buying Indigo as well. But as I said, that you have to have a staggered approach.
Also, we also have Concord and M&M entry levels for these two.
So for M&M, I would be a little bit on the wary side because my sense is that the entire correction is not yet over for the stock price. Today, for example, the stock is seeing a bearish crossover where the 50 DMA is crossing the 200 moving average. That generally may not augur very well for the stock price. So that's a stock which I would suggest just wait out for the entire corrective wave to play out. Maybe if you get the stock say closer to 2,750, 800 levels, in case if the correction extends to that kind of a zone, that's a better price point for you to buy M&M. For Concord, I think if that's the stock, then I would suggest an avoid on Concord because the stock is still trading into a major downtrend.
All right, so that answers all the stocks on which the query was there. But then let's move on. We have a viewer from Chennai on the phone line connected with us, Mr. Vijaya Kirti. Hi, good morning, sir. How are you doing today?
Yeah, fine. Thank you for connecting me.
Thank you so much for sending us your question, sir.
Yeah, so making use of this current correction, I would like to invest 2 lakhs. Okay. I need at least a minimum 3 stocks to invest these 2 lakhs. Okay. My horizon of lookout is 6 months to 9 months to get back my capital.
Okay, 6 to 9 months. Let's take a view from both our experts. Avinash, I'll come to you first.
I think, Kavita, 6 to 9 months, I feel is a shorter period. I think he should at least stay invested for the next 12 to 15 months. But I think if he wants to get into stocks as of now, I would suggest large cap stocks like Indian Hotels, typically, auto stocks like Mahindra and Mahindra, hospital stocks like, say, Apollo Hospitals, maybe smaller companies in the hospital space like Yatharth Hospitals, and in the cold beverages space, something like a Varun Beverages. So I think, he could possibly have a diversified portfolio, and I think follow an SIP approach rather than allocating capital all in one shot and stay invested for the next 12 to 15 months.
Beverages coming in from Avinash. Kunal, would you like to give some recommendation?
I'll go for a slight high beta. I'm not sure whether the viewer is actually looking out for some high beta stocks, but I think it's a good time where you can look to add few of these names. So my suggestions would be to something like DLF, or from the real estate stocks, you can consider Godrej Properties or Oberoi Realties. I think any of the names over here, because my sense is that potentially over the next 1 to 3 months, you could see a decent bounce start to emerge for many of the realty stocks because of the underperformance the stock has shown. You might want to add Tata Steel also, or a few of the metal counters. Tata Steel is one of the more robust ones. That's why I would recommend that. There are other price performers which have been far better. But then because of the way the beta has moved up, I would recommend Tata Steel. And if you're looking for a stable stock as such, then I think Reliance Industries at current levels of 1400 thereabouts is also a good add.
All right, so that's the call coming in. Let's move on to the next question that is coming in on WhatsApp. This question is coming from Venkatesh from Indonesia. He says he's bought in 125 shares of Clean Science at 840 rupees and 500 shares of Crompton. Crompton we have already spoken about. Can I hold it further at the current price for the next 2 years? Avinash, let me come to you for this one. Clean Science he's bought at 840 rupees. Is it a good hold for the next 1 year?
See, I think Clean Science has been one of those companies, Ankita, which has not delivered at all on the numbers. In fact, the company got listed at a significant premium, but I think numbers have not been great. In fact, that is the reason the markets have derated the stock. So I would suggest that yes, he can continue to hold for the next 6 to 12 months, but numbers have to deliver. I think a better choice could be, if you could look at some other companies, say within the capital goods space, something like an Action Construction or maybe even a Crompton, which the investor has got. He could add a little bit more. I would say Clean Science, unless it delivers the numbers, the markets are not going to re-rate the stock. So he can hold on, but keep a time frame of 6 to 8 months and then review and then take a call.
All right, Kunal, would you want to give your view?
I'll suggest an avoid on Clean Science if you're looking to add further, but definitely I think it's a stock which you should look to exit. It's been a huge underperformer and a stock which has been into a major correction. I'll suggest a sell.
Okay, so that's the take on Clean Sciences. But then let's move on. We have Mohit from Ludhiana on the phone line with us. Mohit, hi, morning.
Yeah, good morning.
Hi, you can ask your question.
I got Container Corporation of India, 200 stocks at 512 a piece. I can hold for the next 3 years.
Okay, Avinash.
Yeah, I think Kavita, this is definitely a large, logistic player in the railway space, and I think earlier the stock was in limelight because the government wanted to get some strategic investor here, but unfortunately it did not materialize. I think the railway sector has been not making a very big noise of late, but the kind of investments the government is planning to make in terms of the logistics space, I think Concord definitely has a very strong runway. But yes, we'll have to look at the next financial year numbers. I think Q3 numbers were slightly soft. So I think if the investor can hold on for the next 2 years, he should definitely think of even averaging the stock in a SIP fashion. But I think stay invested for the next 2 years.
All right, I hope Mohit, your question was answered. Let's move on to the next one coming in on WhatsApp. Vaman is writing from Hyderabad. He says, can he accumulate Shakti Pumps and TTK Prestige for the long term? Avinash, let me come to you for Shakti Pumps and TTK Prestige. What is your outlook?
So I think both the companies should do well. Shakti Pumps is largely into solar pumps, and TTK Prestige is into consumer durables. Specifically, the stock has been into limelight of late because since the oil crisis, induction rice tops and basically induction appliances have demand has shot up. So to that extent, I would say that both these companies are operating in a sweet spot. They should continue to do well, but I think the investor should take at least a 12 to 15-month time frame here. Only then I think in both these companies you could get a better risk reward. In the short term, I don't think there could be a big upside. So keep that in mind.
Okay, let's just squeeze in one more caller before we go into a break. This is Mr. Rajiv from Gurgaon. Rajiv, hi, good morning. How are you?
Good morning. Hi, thank you. It's dark, cloudy and raining here in Gurgaon.
Really? Is it? Oh,
yeah.
We just wish we get some rains in Mumbai as well, but then it's summer, so yeah, what can we expect? What's the question?
So I think one of my stocks was SDFC Bank, which Kunal seems to have answered. So I have SDFC Bank 915 average price for over a year. So I think he's suggesting to hold on and not add till this boardroom issue is sorted out. So that was one question. Maybe if Kunal, you want to add something?
Go on.
Yeah, I think that was about it because, I still believe that the stock could have some room on the downside. So hold is what I would recommend. But I think in terms of averaging out, maybe if the stock drops to 750 or sub 750 mark, that could be a good starting point where you may look to average out and then try and take advantage so that you can reduce your initial cost price, which is about 900.
All right, Rajiv, do you want to ask anything on L&T as well? Have you bought this or you're planning to buy?
Yeah, I have L&T 200 at 3,500.
Okay.
And I've been holding it for a year plus. I mean, with the recent fall, is it a good candidate to add more or just hold?
Kunal?
See, I would recommend to hold on as of now, but it's a very good time where you can look to even start averaging out further. Prime reason for that, of course, is what's happened across the Middle East would probably have, sent some near-term shocks to L&T in terms of the price correction. But then we know that over the next period of maybe 3 months or so, if things ebb off, then, the price correction or the intensity of price correction for L&T would subside significantly. So say over the next 1 quarter, there could be a possibility that the stock may fall, say another 100 points, 200 points approximately. That could be a decent 7% correction for a stock like L&T. But then I think if that happens and the stock comes closer to 3,100, 200 levels, I for one believe it's a very good zone where you can look to start buying. So I would recommend a hold on whatever quantity you have. And if you're looking to average further, then just wait for maybe another couple of months. If the stock drops down to sub 3,200 levels, it's a good point where you can look to start averaging out further.
All right, so that was the last stock question for the day. Kunal and Avinash, thank you so much for taking the time out and joining us and answering all the questions. And well, with that, it's time for a quick breather. Don't go anywhere. We're getting more updates on the market after this break, so stay tuned.
Welcome back, and let's shift focus to a very interesting discussion. Royal Enfield has a strong portfolio across 350cc and 450cc, also 650cc bike. Quotes B. Govindarajan, MD, Aisha Motors and CEO. Royal Enfield, so my colleague Srishti caught up with him to know more about the 750cc segment and how did demand pan out post GST cuts for Royal Enfield.
What a ride it has been, and I want to tell our viewers that you have tuned into a very special conversation. We are right here at Royal Enfield's Vallam Medical Plant, and this is where it all comes together. I have the man himself, Mr. BGR, whom we know it as Mr. B. Govindarajan, who is a rider first and CEO next, and we're going to be talking about what's next for Royal Enfield.
Yeah, Srishti, hope you enjoyed the ride.
Absolutely, and what a fun ride it has been.
Yeah, that's Royal Enfield. Come, let's go and talk about that more.
So Vijaya, there's so much to talk about, and I really want to start with you being the category leader, mid-size motorcycling, and it's all about you. What I wanted to understand is that what is that something that you have been able to crack while your competitors, maybe they're still struggling?
See, we are riders first. Starting from Siddharth Lal, myself, to the entire management. So we all ride motorcycles. We enjoy motorcycles. We understand the community. We take more time to understand what the community wants from us as a motorcycle. We continue to work around that. Because we always believe commerce comes for us later. We have to get the happiness and the smile on the face of people who buy Royal Enfield. And the pure motorcycling, which we have been saying, stay true to that and make motorcycles which make every rider to be happy about it. And with that one in mind, last 125 years, we have been carrying on the legacy of pure motorcycling. With all our products currently, that has a character that everybody enjoys. We spend a lot of time on the look and feel, and you know, we always look at any motorcycle, it should be gorgeous. It should be a head turner when people are actually seeing the Royal Enfield when somebody is riding. You've been true to it, and competition is for learning. We don't look at, for a competition, we have to give an answer. It's very difficult. Everybody's strategies are very different. We focus on our strategy. We focus on our community. We focus on our products.
125 years already done. Asking you about the next 125 will be too long. But how do you see the next decade panning out for Aisha Motors? Because there's capacity expansion, you're going international, and you're also getting newer powertrains.
See, Royal Enfield is the oldest motorcycle in the continuous production since 1901. That's a legacy which we carry. All these years, there is one thing which, as an organization, as a company, though it had seen a lot of challenges and it came out to be successful fundamentally because it stuck to one thing, which is delivering pure motorcycling experience to the consumers across the globe. We don't do anything to fake. We don't do anything which is not required for giving that motorcycling experience. Even our product design, we always question one thing is, what is that it adds value for the motorcycling? Over the years, you know, currently we are almost about 1 million plus motorcycle company. As I mentioned at some point of time, 100,000 per year, if you make that itself is a great achievement. Now it has become an 89% market share company, and we have 7 CKD plants outside. We are exporting almost about 80 plus countries from India. Everything is manufactured in this Chennai plants, Vallam, Oragadam, Cheyyar, and all those areas. If I had to tell you about next one, during this time, one is about the petrol. We are also coming out of the flying flea as an electric mobility from our side for City Plus. You will see more products which are coming in because we are creating the category, we are working on it, we are understanding. Not that we have understood everything, but we will be there in the market. We will build the market over the period of time. We are not in a tearing rush. We will go slowly and then build on. International markets, our market shares we are really gaining the market share. In fact, we are number 2 in Brazil. That's another one market which is really opening up. We are focusing more in that market. So all the markets are growing. We are getting accepted across the market. So next a decade plus, our focus will be first here and now, take the flying flea and create a category. And electric mobility from Royal Enfield, it has to get accepted by the people. What we have created in the petrol world over the years, we will, and we are confident that we will create that community even with the flying flea. And even in the petrol vehicle, our understanding is it is going to grow. It will continue to grow. You will see many motorcycles which we will come, but we'll stick to the middleweight. We'll continue to focus on that. We will make more gorgeous vehicles and get more people into motorcycling as a culture. I fundamentally believe, I think that's what me and Siddharth always talk about. We are motorcyclists, we ride, we enjoy motorcycles, and we should be the evangelists for getting the motorcycling culture across the globe. And it is catching up, people are enjoying, that's why Royal Enfield is getting accepted. And slowly we are getting the market share, we are the leader. So time to come, we will continue to do what we have been doing. But we are an agile company, we are quick in correcting anything which is required. We have a very robust process of questioning ourselves to see what should be our strategic plan, how do we do that. So you will see in time to come, we will be the pure motorcycling company legacy carried forward.
I'm sure. So BCR, you talked about getting into different segments. We all are excited about your newer products, but just wanted to understand that will you be exploring newer categories or maybe expanding into the existing one?
See, Royal Enfield, there is a fundamental philosophy is less is more. We don't do too many things. We always call it, inch wide, mile deep. That's what is the fundamental DNA of Royal Enfield. We have chosen that middleweight will be the focus from Royal Enfield, which is 250cc to 750cc. And currently we have a 350cc and a 450cc and a 650cc. So 3 different platforms rendering almost about 15 products. So this itself has a huge potential. If I have to give you some number, in the middleweight, our market share is somewhere around 89%. But in the motorcycle, our market share is as of now about 8-9%. So it does mean there's a huge potential which is there because people want motorcycle, they want to enjoy the motorcycling. We are the evangelist of motorcycling. And that's what we are doing it for the past 45 years. And more people are actually looking up for a motorcycle which has a character. That's why I'm very confident that the platform which we are having now, the 3 different 350, 450 and 650cc platform, there is an enough potential to grow in this. But our focus is always 250 to 750cc as a middleweight.
All right, do tune in to the Motown Show to watch the entire conversation. But with that, it's a wrap on this edition of BNSN. Now, Kavita and I will take a leave. Thank you so much for tuning in.